For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Palantir has recently revealed a new strategic alliance with Tomorrow.io, a well-known leader in weather intelligence technology. The goal of this partnership is to transform global atmospheric information into machine-readable formats that can guide decision-making processes across a wide range of industries. These include national defense organizations, major airlines, supply chain operators, and numerous government agencies. What makes this collaboration particularly interesting is the way it connects two very different types of expertise. Palantir, a company once primarily focused on security and tracking terrorist threats, is now linking up with a weather data firm. While this may seem surprising at first, the importance of weather data in military and commercial contexts is growing rapidly. To understand the significance of this collaboration, consider how modern surveillance and defense systems now rely heavily on satellite and drone technology. These systems function more effectively when paired with accurate, real-time weather information. For example, weather conditions play a crucial role in planning drone strike missions or determining satellite imaging clarity. Palantir's entry into the weather intelligence space is not just about data collection. It is about creating a full artificial intelligence system that can retrain itself continuously and generate minute-by-minute forecasts. This kind of capability is essential in situations where environmental changes can alter mission outcomes in seconds. Moreover, this partnership reflects Palantir's broader business strategy, which involves expanding its reach across as many sectors as possible. The firm has been aggressively pursuing government contracts and working to embed its platforms across various industries. According to recent data, weather-related damages in the United States during 2024 reached an estimated $183 billion. That figure alone shows the financial impact of not having accurate weather predictions. There is an urgent need to improve how weather information is used in decision-making, especially in sectors where timing and accuracy can determine success or failure. Despite the widespread use of weather forecasting tools, most forecasters still lack access to specialized constellations of small satellites that are specifically built for atmospheric observation. This is a gap that Palantir is now aiming to fill. As part of the deal, Tomorrow.io will now participate in Palantir's FedStart initiative. This is a program designed to help third-party vendors enter the federal marketplace more easily. It allows these partners to operate within Palantir's secure cloud environment, which already meets government security standards. This eliminates the need for lengthy certification processes that usually slow down onboarding. Through this initiative, Tomorrow.io gains immediate access to federal agencies, while Palantir integrates a powerful new stream of weather data into its ecosystem. On a global scale, the economic impact of climate-related challenges is estimated to be around $38 trillion annually. By developing a strong suite of weather-related software and artificial intelligence tools, Palantir could position itself to earn billions by catering to industries like insurance, construction, offshore drilling, and most notably, national defense. Still, it is important to recognize that this partnership is in its early stages. While the potential upside is considerable, it is not yet clear how much revenue or long-term strategic value this deal will ultimately generate. Nevertheless, the logic behind the move is sound. Consider the United States Navy and Air Force, for instance. Both of these military branches could potentially save significant amounts of money and time by adopting a unified artificial intelligence platform that handles weather analysis. Many people do not realize that the United States Air Force operates several specialized weather squadrons. These units are responsible for providing detailed forecasts that influence flight plans, mission timings, and personnel safety. If Palantir's system proves to be more efficient and reliable, it is very likely that the Department of Defense would take it seriously. While this one partnership may not immediately cause analysts to change their fundamental valuation of Palantir, it does add to a consistent pattern of growth and innovation. Palantir's management team has demonstrated a clear commitment to executing its long-term vision, and this has translated into strong financial results. The company has been delivering performance above expectations and has raised its targets repeatedly. In fact, many investors and analysts have shifted their focus away from traditional valuation metrics like the price-to-earnings ratio. Instead, they are now prioritizing factors such as free cash flow and future earnings potential. Palantir's most recent financial metrics are especially impressive. The company's free cash flow margin over the trailing 12-month period stands at 42.3%. This figure places it ahead of more than 97% of firms in the broader software industry. Management has issued guidance indicating that free cash flow could fall between $1.6 billion and $1.8 billion, based on projected revenue of $3.89 billion to $3.9 billion in the year 2025. Given Palantir's consistent track record of outperforming its own forecasts, many market watchers believe these numbers could be conservative. In other words, the company may well exceed both its revenue and cash flow expectations. Let us assume that Palantir reaches the higher end of its forecast and generates $1.8 billion in free cash flow. At current valuations, that would place the company's forward price at 199 times that amount. While this figure might seem high at first glance, analysts expect Palantir to maintain a free cash flow margin of around 40% for the foreseeable future. This long-term consistency in margin performance could help justify the valuation. Looking further ahead, many analysts believe Palantir could achieve $5 billion in total revenue by the end of 2026. Based on its current momentum and customer acquisitions, that figure might actually end up being even higher. If Palantir does reach the $5 billion mark, and assuming the company maintains its 40% free cash flow margin, it could generate around $2.2 billion in free cash flow for 2025. In that case, Palantir would be trading at 162 times the earnings forecast for 2026. This type of growth story is uncommon and explains why investor interest in the company remains strong. If Wall Street continues to value Palantir using current cash flow multiples, then the stock could potentially rise well above $200 within the next 12 months. That would represent a significant increase from where the stock currently trades. That said, it is important for investors to proceed with caution. While the upside potential is real, the risk of a broader market downturn cannot be ignored. Economic cycles tend to change, and a reversal could impact Palantir's stock price before 2026 arrives. Because of this, a hold rating might be the most prudent course of action for now. This view is shared by many analysts who have issued a general hold consensus on Palantir shares. While the author of this article did not hold any position in Palantir stock at the time of writing, it is still valuable to consider his perspective. Personally, I disagree with the hold stance because I believe Palantir has a strong foundation and a forward-looking business model. Nevertheless, hearing both sides of the argument is critical before making any investment decisions. Understanding the risks as well as the potential rewards will help investors make more informed choices. In the end, Palantir has entered into a partnership with weather technology leader Tomorrow.io to transform global atmospheric data into a decision-making tool for industries such as defense, aviation, and federal agencies. This collaboration allows Tomorrow.io to join Palantir's FedStart program, giving it access to government clients while enriching Palantir's data ecosystem. The company aims to deliver minute-level forecasts using artificial intelligence, and with weather damages in the United States reaching $183 billion in 2024, there is a strong market need. Analysts see this as another growth step for Palantir, whose free cash flow margin stands at over 42%, better than most software companies. With guidance pointing to up to $1.8 billion in free cash flow for 2025 and potential for $5 billion in revenue by 2026, the company's valuation could soar if these numbers hold. However, with potential market downturns ahead, analysts remain cautious with a hold rating, even though many investors believe Palantir's momentum and long-term prospects are hard to ignore. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.